I'm Charlotte McLeod with investingnews.com, and here today with me is Jeff Clark, founder of Paydirt Prospector. Thank you so much for being here. Great to have you.
It's great to be back with you, Charlotte, in this bull market.
Yes. Okay, so we're here at VRIC. We seem to see each other every year here. And the top question on my mind right now that I'm sure everyone else wants to know as well, has Jennifer Aniston called you yet?
Right.
And for context for everybody, we talked 2 years ago here at VRIC, and you told me you would know when gold was topping when you're getting calls from somebody like Jennifer Aniston.
Exactly right. And when somebody, like that calls somebody that looks like this, she's really reaching down the chain, But no, I haven't really seen that. There's no shoe shine boy asking the Wall Street person if, about telling him about the stocks he bought. We haven't seen that. Gold has obviously run. The mining stocks have obviously run. But surprisingly, the Main Street and Wall Street have not come into this market yet. That's why I'm still bullish.
I was going to ask, because I know your theme right now is you do still remain bullish despite the high prices we're seeing in gold and silver.
That's a great question, because 2025, look at how 2025 was. The top performing major asset class in 2025 was GDX, gold mining stocks. In fact, the top 5 around the world, the top 5 performing asset classes were all in the precious metals sector. So it's only natural to ask, especially with how we've seen prices with gold and silver, especially now over 100, have really spiked. It's only natural to ask, how much longer is this going to go on? And the reason I'm still bullish, though, is because if you put it in context, gold is still undervalued relative to the NASDAQ. It's actually near its all-time lows, believe it or not. So has gold really moved that much when the ratio with the NASDAQ, for example, is still near all-time lows? In fact, the ratio, believe it or not, Charlotte, is below 2020. It's below 2016. Gold is below the NASDAQ now than it was in those periods. I'm forced to be bullish.
Forced to be bullish. Okay, I like that as a slogan for 2026.
Yeah.
And I wonder if you can talk a little bit about the outperformance of gold and silver versus other assets in the past year or so. Because at this event and also outside of this event, I'm seeing all these charts showing, gold versus the NASDAQ versus the S&P. So anything you can say on that note?
Well, again, it's the same theme. You can look at gold. You can look at gold stocks to the NASDAQ, gold stocks to the S&P, gold or gold stocks to the Dow. All those ratios are still very low. And in fact, there's a lot of technical analysis charts out there that will tell you and show you that gold and gold stocks have broken out now versus the Dow, versus the S&P. To them, that's a very significant indicator that this still has room to run. And those ratios could really decline, meaning gold or gold stocks is outperforming those other asset classes. I expect that to happen. I do expect a correction in 2026, but I don't think that will mean the bull market is over.
Okay, let's talk a little bit more about that. I know we've talked about price before, and you've started to emphasize that it's really less about price for you and more about being prepared. But I think people are really wondering about the price potential of gold, and also if there is going to be that pullback, how much could that be? Because there's still people who want to get in or add to their holdings there.
The answer for me is not probably what people want to hear. You got to pick which P you want. You're going to try to predict it, or you're just going to prepare for it.
Yeah.
We don't know when the crash, or I shouldn't say crash, when a correction will come. We don't know how big it'll be. We don't know how long it'll last. So therefore, you don't know those answers. You can guess, but to me, that's almost entertainment. So I prefer to look at preparing for that. And so even though I'm very long, and even though I have not taken profits on a lot of things, the number one antidote to a crash or a correction is your cash level. If you have a big cash level, you're prepared and you're going to feel a lot more confident going into some type of correction. And so I remain long. I'm continuing to invest in opportunities as I see them. I've not taken a lot of profits, but I've got a big cash of stash, or stash of cash for the crash. There you go. Say that 3 times fast. So that's how I prepare for it, because I don't know those other answers as to when or how long it'll be.
Yeah, fair enough. And I'm not going to try to say it because I know I'm not going to be able to do that one. But let's talk a little bit more about your strategy, especially in this environment where the gold price is so high when it comes to choosing stocks. How are you approaching that?
Approaching.
Approaching just choosing gold stocks and buying them in an environment where the price is so high.
Right.
And of course, the company valuations have probably gone up as well.
They have, and a lot of stocks that we own have gone up a lot. Some have not, and that's one thing I'm looking for is, I'm still looking at all the criteria that I outline in the book. They've got to meet all that criteria. And then I look at the price, and if it's gone up, I was just talking to someone about a stock he likes, and it's gone up 11x in like 6 months. So I can't bring myself to chase that stock. So part of the criteria is looking for something that quite hasn't left the station yet. And so many have run so hard so fast that even a double it has not left the station yet, because so many have run so much bigger. So price in this environment has to be part of your consideration. But I think for me, what I'm doing is going a little bit further down the food chain. New companies, earlier stage companies, even a couple private companies. So I'm looking at things like that to grab value in a raging bull market.
Okay. So you're moving down into those smaller ones that weren't necessarily appropriate before, but now in this price environment, that's where we can go.
Again, if they meet all the criteria that I look for, then and the price has not run up, I just might be jumping in that. Yes.
Well, and let's talk a little bit about M&A activity in the gold space as well, because we've definitely been seeing it, but it seems to be more at that bigger company level with the majors or the intermediates doing transactions. And I wonder if they might also start to be ready to come down the food chain to the juniors as well.
That's usually what happens, right? We haven't seen a lot of that yet. We've seen some of it, but not a lot. And I think, history would say that's next, that we've had some M&A in the big producers, the smaller producers or mid-tiers, whatever. But we're going to see more of it because we have to. We all know they need ounces. We also know from history that they start with the big stuff and then they move down the food chain. So I think that's going to pick up. I think, as long as you're buying high-quality companies in pro-mining jurisdictions that are run by great people that can actually push a project forward in appropriate and aggressive ways right now, that could be an easy M&A target. So I don't buy something because it might be an M&A target. I buy it because it's representing great value at where it's at right now and as a good prospect for, seeing a big gain. And at some point, some of those are just going to get bought out because they have to.
Well, and I think the other half of knowing what is a good buy right now is knowing when to sell. So you mentioned a little bit about taking profits, and it's something I'm trying to bring up with everybody right now because it seems like investors really have that question with the gold price, silver price so high. So any thoughts or advice you'd share?
I've been asked that a lot already here at VRIC, and the answer for me is what I mentioned earlier. I'm not taking profits, but it's because I have a big cash stash. So that I feel better about not taking profits when I have that. For someone who doesn't have a lot of cash, I might suggest that you take some profits in this environment because we will get a correction. You can't go like this indefinitely without there being some type of pullback. So you have to judge your own portfolio where you're at. Do you need to take profits because of your cash level? That if you look over at your cash level, that might give you an answer as to what you should do.
Right. And I think this is very individual as well. But I was thinking, because of the metal price movement, some companies might go up a lot and you might want to sell even though they haven't necessarily met the milestones you were looking for. Is there anything you would mention on that end?
For companies that...
Sorry, I think I said that in a confusing way, but the prices of the metals have gone up so high that maybe the company's share prices make a big move And it's even without seeing whatever milestone you're waiting for from the company.
Oh, right.
Yeah.
Well, starting big picture, gold stocks relative to gold, like the ratios I was talking about before, gold stocks basically, as a group, have not moved. Believe it or not, as much as some of them have skyrocketed, as a group, they have not moved. That ratio of gold stocks to gold is still very low. So the big move, believe it or not, with gold stocks is still ahead. So again, I'm still looking at all the criteria, make sure they're there. I'm not going to want to chase a stock that's up 10x, but you know what? A stock that's up maybe doubled, I might have to force myself to jump in because, a lot of us have preached, don't chase a stock that's running because these stocks are very volatile. That's exactly what we're seeing right now. But we're in an environment right now where, it may already be going down the track, so you might have to jump on even though it's sort of left the station, but it's not at full speed yet. So, but yeah, that's a great point, by the way. Looking at companies that haven't quite met their milestones yet or their goals, haven't carried all those out. I like those companies because all that is still ahead, which would imply, greater upside in their stock.
Yes, that's exactly what I was getting at. So you got what I mean there.
Yeah.
And all right, so you mentioned we still have this big move coming in gold stocks. I need to ask you then about silver stocks because it feels like people have switched from asking when will gold stocks move. Now they want to know when are silver stocks going
Right.
to outperform the metal. So what are your thoughts there?
That's the trend. That's the natural progression of this market, right? People go to gold first. Gold leads, silver lags. Same with the stocks. The gold stocks have moved. Some of the silver stocks have moved. Some have not. So as a group, they're still very undervalued as a group. So there are individual cases where they've really run hard, and there are individual cases where you probably wouldn't want to buy them. But as a group, they're still undervalued relative to the silver price. So I think that is still ahead. So you need to position for that. Don't worry about trying to predict when it's going to happen or how big it's going to be or how long it'll last. I don't worry about those questions. I look for opportunity and let the metals markets take care of it themselves.
Well, and let's talk then about how you would position in silver right now, because what I always hear is the universe of silver stocks is so small.
Yes.
And because of that, and because silver is a byproduct a lot of the time, there are few companies that are actually pure silver or
right.
mostly silver. So
Right.
what are you doing?
Well, I do like looking for pure silver producers. They are hard to find. There's not a lot of them. Some are ones you probably don't want to buy. Some are way past the stage that I would look at. I'm not, I don't look at a lot of producers to be, upfront about that. So I'm looking more at developers and juniors and explorers and things like that. And a lot of them are still poised to still benefit from this run. So I am looking there. You're right. There's not a lot of them. So you have to look and pick and choose the ones that really, you'll think could do well and have really strong prospects. They're out there. There are some out there. But since it's such a smaller universe, your screening is a little easier because there's not a lot of them.
Yeah, that's true. In a way, it does make it easier. And I wonder if we can talk a little bit about this breakout that we've seen in the silver price. It just had a huge milestone just a couple of days ago, reaching that triple-digit level for silver.
Yeah.
I know that you are looking at cycles a lot of the time. We talked about how silver follows gold higher, but what would you say is the driver behind this move in silver?
In silver, I would say it's gold. We always see gold move first, then silver comes, and that's what's happening now. Silver outperforms gold historically in bull markets, and now we're seeing that. The ratio is falling. The ratio is down significantly just in the last few months, but it's nowhere near where it actually hasn't hit the 2011 level yet. Maybe it does by the time your interview is
we'll
out.
See.
Yeah, we'll see. But it's nowhere near where it was in 1980, which the ratio then bottomed at 17 on a closing price basis. So we've got a long way to go for that ratio. But I think silver is being drug up because of gold. And then you have the other issue of the supply type squeeze. It's not so much demand, it's more on the supply side. And there's no end in sight in terms of how that's going to resolve itself. Any constituency out there will report that that silver's going to be in another deficit this year. I can't find one consultancy that doesn't report that studies this. So again, there'll probably be a correction. There'll have to be at some point, but that won't mean the end of this because with silver, it's really a structural issue. They don't have enough silver to bring on. There's not enough supply readily available to meet all the demands. And that's a structural problem. You can't just solve that by, flipping on a switch. And so that's why I think I'm long-term bullish on silver still.
So long-term bullish on silver as well as gold. They're definitely having their moment right now. But I am starting to see people wondering, all right, what might be the next bull market? So what follows on after we have these gold and silver moves?
That's a great question. Personally, I'm in copper. I'm in uranium. I think those two are ahead. The copper price has moved. Uranium, not so much. The equities, a little bit, but not a whole lot. So copper and uranium, definitely focused on. And at some point, we're going to have to, we as an organization, have to get more into maybe the rare earths, the critical minerals, maybe back into lithium. We'll see how those things play out. But there will be the next bull market somewhere in the commodity sector. And so we're going to do everything we can to capitalize on it. But that's where I would start to look first.
Yeah, and it gets a little bit trickier, I think, to evaluate. Well, copper, of course, uranium, those are big ones. But once you get down into rare earths and lithium, that gets a little trickier to evaluate.
It does, because those are smaller markets. The rare earths especially is an opaque market. So it does get tricky. But there will be opportunities out there. As someone famous said, there's always a bull market somewhere. So in commodities, this is our time. The commodities market is just now starting to move. It's been undervalued for many, many years. And so that means there's going to be other opportunities out there.
Absolutely. And I know I've got to send you back out onto the show floor, but any final words that you would leave investors with as we're continuing on into 2026?
I think you should, prepare for a correction in 2026. No guarantees I'll be right about that, but we just can't have this kind of move without there being a correction. But in the same breath, I'm saying I'm still long. I'm not taking profits. If someone wants to follow that lead, they can, focus on what their cash level is. I think that's a good way to look at your portfolio balance and how you can prepare for that. So we're growing like crazy at our company. We have 2 free newsletters, 2 paid newsletters. We just hired another helper on the Paydirt Prospector side, another analyst. We just hired a geologist on our staff. We have a marketing manager now. So we're growing like crazy. But all of it is not because I'm greedy. It's because I want to do everything in my power to fully capitalize on this bull market. That's it in a nutshell. That's our mandate. That's what I'm personally doing.
Well, thank you so much for sharing. And I think that growth just also tells you where we are in this cycle right now.
It does. Right, because we wouldn't have done that 2 years ago.
Exactly.
Or even 1 year ago. So
Yeah. Well, thank you so much for coming on to talk. This was great to go over. I think I have your thoughts very clear in my mind, and we'll catch up with you next time.
Next time, and you can ask me again if Jennifer Aniston is called. I don't think she's going to call yet, though.
I'm going to keep asking until we get that yes.
Right.
Okay,
right.
Well, thank you so much. And once again, I'm Charlotte McLeod with investingnews.com, and this is Jeff Clark with Paydirt Prospector.